Debt, often viewed as a perilous endeavor, is a topic that has been ingrained in our minds since childhood. Advice from parents, aunts, uncles, and well-meaning mentors have frequently echoed the same sentiment. Avoid debt at all costs. It's a cautionary tale, a warning that debt can lead to financial ruin. But like any multifaceted concept, debt cannot be painted with a broad brush. To comprehend the intricacies of debt, we must ask the question, what is the essence of debt? Is debt an essential financial tool? And if so, under what circumstances should we embrace it? Conversely, are there types of debt that we should vehemently avoid? Well, today I'll take you to the hard truths about debt they don't want you to know about. If you're new to the channel, hit that subscribe button and that little notification bell icon so that you don't miss out on any of our video updates. Plus, it helps us spread the Thrive Wise love to help more people thrive wisely. Now, let's begin. In the labyrinth of finance, where terms like debt often echo ominously, it's crucial to decipher this enigmatic concept before diving headfirst into the world of loans, interest rates, and credit scores. So, what exactly is debt? Well, it's not just a magic word that makes wallets tremble in fear. It's a financial transaction, a dance of dollars if you will, where one party borrows money from another with the promise to pay it back. It's like borrowing a cup of sugar from your neighbor. Except instead of sugar, it's cash. And instead of returning it with a smile, you return it with interest. Ah, the joys of adulthood. Now let's meet the players on this financial stage. We have the borrower, who could be anyone from your next door neighbor to a big shot corporation. And then we have the lender, the folks with the money to spare. It's like a cosmic balance, where one party needs funds and the other has them to lend. But wait, there's more. Debt isn't just about borrowing money. It's also about repaying it. That's right, folks. It's not a free ride on the debt train. Along with borrowing comes a game plan, a roadmap, for repaying the borrowed sum. And just to spice things up a bit, we often throw in some interest, because who doesn't love a little extra challenge? Now let's talk categories. Debt, like flavors of ice cream, comes in all sorts of varieties. We've got secured debt, where the borrower puts up something valuable as collateral, like a piece of property or a shiny new car. It's like saying, here, take my TV. I promise I'll pay you back. And then there's unsecured debt, where it's more of a hard-shake deal. No collateral required, and it's like asking your friend to spot you for lunch and promising you get them back next time. Simple, right? But hold your horses, because we're just getting started. Now, let's address the age-old question. Is debt a friend or a foe? Well, it's a bit of both. Like that frenemy you can't quite figure out. Good debt, you see, is like a trusty sidekick, helping you achieve your financial dreams. It's when you borrow money for things that will pay off in the long run, like buying a home or starting a business. It's like planting seeds in a garden and watching them grow into money trees. But beware, for there's also a dark side of debt, the bad debt. This is when you borrow money for things that don't exactly bring home the bacon, like maxing out your credit card on designer shoes or fancy dinners. It's like buying a one-way ticket to financial stressville. Now here's where things get interesting. Debt isn't always black and white. Sometimes it's more of a murky gray. Take student loans for example. On one hand, they're an investment in your future, opening doors to higher paying jobs. But on the other hand, they can feel like a heavy weight dragging you down, especially if your dream job doesn't come with a dream salary. And let's not forget about car loans. They're a necessary evil for many of us, providing wheels to get to work and back. But if you're cruising around in a luxury car you can't afford, well, that's a recipe for financial disaster. So in our quest to unravel the mysteries of debt, we've laid down the groundwork for dissecting its essence distinguishing between the virtuous and the villainous, and shedding light in its intricate nuances. But like intrepid explorers navigating uncharted waters, our journey wouldn't be complete without venturing into the vast expanse of debt's diverse terrain. So buckle up, since we will embark on a voyage to explore the various types of debt that shape the financial landscape. But before we continue, if you're enjoying this video, please take a moment to like and subscribe. It really helps us spread the Thrive Wise love so we can help more people thrive wisely. And going back, number 1, business debt. For aspiring entrepreneurs and small business owners, the prospect of growth often hinges on the strategic use of loans and credit. Business debt encompasses a wide array of financial instruments, including term loans, lines of credit, and equipment financing. However, it's crucial for business owners to approach debt with meticulous planning. Blindly accruing debt without a clear strategy can lead to cash flow issues, and in the worst cases, the demise of the business. Hence, business debt falls into the category of debt that can be good or bad, contingent upon prudent financial management and a viable growth plan. Number 2, credit card debt. Credit cards have become ubiquitous in today's consumer-driven society, offering convenience and flexibility in managing everyday expenses. However, the convenience of credit cards comes with a caveat: high interest rates. Credit card debt is a classic example of unsecured debt, meaning it's not backed by any collateral. While it can be a convenient tool for managing short-term financial needs, mismanagement can lead to a cycle of escalating debt due to compounding interest. Effective management is essential, which includes paying off the balance in full each month to avoid interest charges. When managed responsibly, credit cards can provide benefits such as cashback rewards and purchase protection. Number 3, mortgages. Among the most prevalent forms of secured debt, mortgages allow individuals to acquire property, typically homes, by borrowing a substantial sum of money. The borrower often provides a down payment as a show of commitment, and the loan is secured by the property itself. Mortgages come with long repayment periods, spanning several decades in many cases. The appeal of mortgages lies in their ability to facilitate homeownership, a pivotal aspect of financial stability for many individuals and families. When utilized wisely, mortgages can be a form of good debt, as the property often appreciates in value over time, potentially exceeding the overall cost of the loan. Number 4, personal loans. Personal loans are a versatile form of borrowing that individuals can utilize for various purposes, such as home improvements, debt consolidation, or unexpected expenses. These loans typically come with fixed terms and interest rates, making them a predictable means of financing. Personal loans are generally unsecured, meaning they do not require collateral. The key to using personal loans effectively is to have a clear plan for how the funds will be used and a strategy for repaying the loan within the agreed upon time frame. Number 5, car loans. In the race of life, having wheels beneath you can mean the difference between getting ahead and being left in the dust. Car loans rev up the engine of accessibility, offering a pathway to vehicle ownership for many individuals. These loans grease the wheels of commerce by allowing borrowers to spread out the cost of that shiny new ride over a set period, complete with a down payment and a fixed interest rate. But beware, car loans can lead to a financial collision if not navigated with caution. It's not just about the monthly payments. You've got to factor in the whole shebang: insurance, maintenance, fuel costs, the whole 9 yards. Because let's face it, defaulting on a car loan isn't just a bump on the road. It's a full-blown detour that can land you in repossession city faster than you can say vroom vroom. Number 6, medical debt. The unexpected curveball of life. Medical debt. Just when you thought you were cruising along smoothly, bam! You're blindsided by a mountain of medical bills, leaving your finances spinning out of control. But fear not, my dear viewers, for all hope is not lost. Managing medical debt is like performing surgery on your budget. You've got to be precise and methodical. This often involves striking deals with healthcare providers, setting up payment plans, or even negotiating to lower the overall amount owed. Communication is key in this operation, so don't be afraid to pick up the phone and dial your healthcare provider. After all, a healthy credit score is just as important as a clean bill of health. Well, that's basically the hard truths about debt they don't want you to know about. And thank you guys so much for watching today's video. And hey, it seems that YouTube thinks that the next video can completely transform your financial situation. Watch it to find out whether they're correct. And please don't forget to click the subscribe button to see more videos on how to thrive wisely. Till next time.